let's say we have a business like this. Okay, sorry. Okay. Okay. Let's say we have a business like this. Okay. So okay. Now here it is month 0 or the start of the business. Okay. Here it is month 12. Okay. So this will be the first year. Okay. Then we have the month 24. Okay. This is the second year. Okay. So let me explain about the stock. Okay. How the stock and the other components are being related to the cost of sales. Okay. Now I am going to talk about example where I am doing a business of noodles. Okay. I am doing a business of noodles. I import and sell noodles. Okay. I import and sell noodles. Okay. I import them in containers. Okay. I import them in containers. Containers are ship containers. Okay. Ship containers. I am importing them in containers. Okay. So let's say now as we begin the business, okay, okay, I don't have any stock. Okay. Start. Okay. Month 0. Okay. I have no stock. I have no stock. Then what I do is, therefore, what I do is I import 6 containers. Okay. I import 6 containers. Okay. I import 6 containers. Okay. Then during this period, okay, okay, what happens is during that period, I will use 4 containers. Containers during month 0 to month 12. Okay. Then at month 12, my stock available is called the closing stock. Closing stock. So at the beginning I had 0. Okay, at the start of the business I had 0. Then I imported 6 containers. Okay, out of that I used 4. Okay, therefore at the end of the period I am left with what? I am left with 2 containers. Okay, so that is done and dusted. We know it. Now the important thing is, okay, in the next year. Okay, this is happening in the first year. Okay, this is happening in the first year. Now in the second year, okay, okay, closing stock of the first year become opening stock of the second year. Sorry, in the second year, closing stock of the first year become the opening of stock of the second year. In the second year, closing stock of the first year become the opening stock of the second year. What is my opening stock in the second year? That will be 2. Opening stock of second year is 2. Now in the second year, I do not have sufficient stocks to do my operation, because I am usually selling 4 containers. Okay, because I will use 4 containers during the month 0 to month 12. Okay, because this year also, let's say I am using 4 containers. Therefore, what I do is I import another 4 containers. Okay, this is my purchases for the year 2. Purchases for the year 2. Okay, this is the purchases for year 1. This is the purchases for year 1. Okay, so these 4 containers, I can import them, okay, as cash and as credit. Okay, so both of them will be considered as purchases, both cash purchases and credit purchases. Okay, so what happens? Okay, so I had 2 closing stock, I imported 4, and now I have 6 containers. Okay, then during the year, okay, during the year, let's say I use, during the year, I use 3 containers. Okay, then my closing stock, okay, then closing stock of year 2 will be how much? 2 in the beginning, my opening stock. Okay, then I purchased 4, I used 3. Okay, my closing stock will be 3. Okay, my closing stock will be 3. So in this example, I explained what is happening in with the stocks. Usually in a business, in the month 0, you don't have any stock. Okay, see, at the start, you have no stock. Okay, see, in the month 0, you have no stock. Okay, then what you do is, in this year, you will be purchasing stock. First year, you will be purchasing 6 containers. Okay, then during that year, you will be using 4 containers. Okay, so you had 0 at the beginning, so you purchased 6, and then you used 4. So at the end of the period, you will be left with 2 containers. That will be the closing stock. Okay, now closing stock in this month 12, or at the end of the year, at the end of the first year, the closing stock will be the opening stock of the second year. Okay, see, in the second year, closing stock of the first year become the opening stock of the second year. Okay, closing stock of the first year become the opening stock of the second year. Then as the opening stock, you have 2 containers. Then for that year, for the second year operation, you will be importing another 4 containers. Why? Because that 2 containers is not sufficient for your business. So because of that, you will be importing 4 containers. Okay, these 4 containers, you will be importing 2 containers, let's say some containers in cash and some containers in credit. Okay, this import can also be identified as the purchases. Okay, it can be also identified as the purchases for the year 2, and this 6 container importation is the purchases for the year 1. Okay, now during the year, what happened is, you will be using 3 containers. Okay, you will be using 3 containers. So the closing stock of the year 2, closing stock of the year 2 is, now you started with 2 containers. See, these 2 containers, and then you imported 4 containers, these 4 containers, and then these 3 containers you used it, and the closing stock will be how much? 3. Okay, that will be the closing stock of the year 3. Okay, so we have a good idea about stock usage. Okay, opening stock and the purchases for a particular period, that could be cash and credit, and then the closing stock. So all these components are clear now. Okay, now in terms of cost of sales, okay, in terms of cost of sales, okay, in terms of cost of sales, now we need to calculate the cost of sales. Okay, so the cost of sales will be opening stock. Okay, let me write it in another color. Okay, opening stock, then to that we are adding the purchases, and then we are deducting the closing stock. So this will be the cost of sales. This will be the cost of sales. In fact, for that particular year, for the production, the stock you used, opening stock, add purchases minus closing stock, that will be the cost of sales. Okay, now these purchases, okay, these purchases can be cash or credit. Okay, that can be cash or credit. Okay, this is the step one. Okay, then in the step 2, what happen is you take this cost of sales. Okay, you take this cost of sales. Okay, this cost of sales, and then you will have to add it carriage inwards, other expenses. Okay, carriage inwards and shipping fees. Likewise, you will have to add them. Okay, then that will give you the final cost of sales. Okay, that is what is taught in these slides. Okay, let me explain. That is what is being told in these slides. Okay, with this graphical example, I wanted to explain you. Okay, that is what is being explained in these slides. Okay, so let me read them out for you. Once the entire stock is sold out, the cost of the inventories that was presented for trade is considered as the cost of sales. Okay, now cost of the inventories that was presented for trade is considered what? Cost of sales. Okay, and how did we calculate this? Cost of the inventories that was presented for trade is the cost of sales. How did we calculate this? Okay, opening stock plus purchases minus closing stock. That is how we calculated it. Okay, but a business organization can have some inventories yet to be sold at the end of the accounting period. Okay, now we had 6 containers. Okay, we had 6 containers. We used 4 and we are left out with 2. Okay, so but a business organization can have some inventories yet to be sold at the end of the accounting period. In such a situation, cost of the sales is calculated by deducting the value of the closing stock from the cost of the goods that was presented for the sales. And ඒ කියන්නේ අර මේ අපි කතා වුණ කතාව මේ purchases වලින් මේ closing stock එක අඩු කරනවා කියන එක තමයි මේ කියන්නේ. Right? Then they have given example. The same closing stock at the 31st 12 2015 come the opening stock of 1st Jan 2016 in the next accounting period. That was why what I explained here. Okay, in the second year, closing stock of the first year become the opening stock of the second year. That is what is being told here. The same closing stock as at the 31st December 2015 become the opening stock of the 1st Jan 2016. Okay. There is no opening stock exist for the business in the first year of the operation. Business එක පටන් ගනිද්දි month 0 වලදී you don't have any stock. Okay, you have no stock. In a particular accounting period, a business has to purchase goods to sell as opening stock of a good is not adequate for the sale of the sale to be done during the year. So here I told in the second year, I have this 2 opening stock and I am importing 4 containers. Okay, I told that I am importing 4 containers. Why? Because the remaining the two containers in the opening stock is not sufficient for my entire year's business. Therefore, what I do is I am importing 4 containers. In a particular accounting period, a business has to purchase goods to sell as opening stock of the good is not adequate for the sale to be done in the year. Opening stock එක අපිට මදි හින්දා අපි අලුතෙන් බඩු ගේන්න වෙනවා. Okay. The purchases made in terms of cash and credit totals for the purchases made during the accounting period. See, here I told you, these purchases, you can buy it in cash and credit. So both these cash and credit sales will be included in purchases. Okay, will be included in purchases. So purchases made in terms of cash and credit totals for the purchases made during the accounting period. So cash purchases will be 24,000 and credit purchases 58,000. Then total purchases is 82,000. Then transportation expenses, loading and unloading expenses, etc., has to be incurred when purchasing goods are transported to the business premises in order to obtain the total cost of the inventories. Okay, total cost of the inventories, all the expenses related to the purchases, including the costing incurred in bringing stocks to the current position and condition, should be considered. එතකොට මම ඔයගොල්ලන්ට කිව්වා මේ මුලින්ම අපි කතා වුණා මේ නිකන් මේ ඉන්වෙන්ටරි එක මේ ඕපනින් ඉන්වෙන්ටරි එකට purchases එකතු කරලා closing inventory එක අයින් කරනවා. stock එක කියන්නේ ඉන්වෙන්ටරි එක. දැන් මේකෙන් තමයි step 1 එකකින් ආපු cost of sales එක ආවේ. හරිද? ඊට අමතරව we have other expenses. Okay, for example, what transportation expenses, loading expenses, unloading expenses. Okay, so for here I included 2 examples like carriage inwards, shipping fees. Okay, so this has to be added, and that will be in order to obtain the total cost of the inventories, all the expenses related to the purchases, including the cost incurred in bringing stocks to the current position and condition, should be considered. So we calculated it. Okay. Therefore, when calculating the cost of the goods sold, following elements taken into consideration: opening stock. Okay, opening stock. The total purchases, including the cash and credit purchases. This one, closing stock. Okay, closing stock. Okay, and then what are we doing here? We take stock. Okay, we have taken the opening stock, and to that we have added the purchases. Opening stock, added purchases. Then we have added other expenses, loading expenses and carriage inwards. These has been added. Okay, then out of that we have deducted the closing stock. See, we have deducted the closing stock, and that will ultimately given us the total cost of sales. Cost of sales is 90,000. Okay, so gross profit is sales revenue minus cost of sales. Okay, that we learned at the beginning. Okay, gross profit is sales revenue minus cost of sales. Okay, so gross profit is sales revenue minus cost of sales. Okay, so that's it. So that is how we go up until the gross profit. Okay, so you can take a couple of minutes and start writing the note. Okay, these 4 slides, you can start writing them. Profit or loss statement from this point, cost of sales point. Okay, from that point you can start writing the note.